Hey mamas, welcome back to another video. Today we're going to talk about how to make your investments pay off. So we're going to talk about your return on investments. All right. So what is return on investment? Return on investment tells you how well your investments are paying off. So the definition of ROI is a performance measure used to evaluate the efficiency or profitability of an investment or compare the efficiency of a number of different investments. So, to give you an example, Megan bought a computer for editing her business for $1,500. Okay, so during the month, Megan generated $4,500 in revenue from editing. This means her ROI is 66%. And we're going to go into detail how to calculate your ROI. But essentially this is what situations will look like. You'll go and you'll purchase an item, say a computer, because you need to do your editing, you need to create content, you need to make fantastic edits on photos. And so you go and you buy the computer for a pretty large investment. You have to have the money first. When it comes to like the chicken and the egg situation, you have to have the money first to grow a sustainable business. Now, when she purchases the computer, she then is able to create really great content, edit really well, and she uploads that video, or she uploads that edits, or she sends those edits to a client, and she generates $4,500 in revenue. Okay. So if we take those numbers, we come to an ROI of 66%. ROI really tries to directly measure the amount of return on a specific investment, okay, relative to that investment's cost. So you do have to take in consideration how much it will cost you to put that investment into service. So if that means I also need to have a specific type of software, that's going to be a cost. If that means you need to have a specific type of keyboard or mouse, whatever additional costs you incur in your business to implement or to put that asset into production will also contribute to your ROI. Now, here's another example, and this is a pretty common example nowadays, especially. So a client invested $5,000 in a coaching program, okay? This coaching program was 6 weeks long. As a result, my client closed a $10,500 contract. So this coaching program allowed my client to gain the skills and knowledge that they needed in order to close this contract. And again, that contract was 10.5. Now, there were additional costs associated with that contract. However, for instance, this client needed to sub out a portion of the work, and this client also needed to purchase a software to complete that engagement. So therefore, there were additional costs that were needed to put that contract into place. So we also get to take the estimated expenses of $2,500 and subtract that out. Now, what we do is we take the amount of revenue generated, subtract out the investment cost, and subtract out the cost to implement that asset or that program or that investment, and you divide that by the assets or the program's cost. And here we get a 60% ROI. Now, please understand, your ROI is going to fluctuate based on the investment that you're making and the industry that you are in. Okay, very important. There are specific average standard ROIs. There are specific averages for different types of investments. So an ROI in one industry may be completely different, lower or higher than an ROI in a different industry. An ROI for a specific type of asset that you purchase might have a standard ROI that is different than a different asset that you might purchase. So you want to check the standards before you begin to make investments, especially in coaching programs, especially in things that could be more subjective. You want to determine what is the standard ROI for this type of investment. And you want to expect generally about that same average. Now, on average, okay? So it could be a little bit higher, it could be a little bit lower. But before making any type of large investments in your business, it's important to determine what is the average ROI for this investment. Let me ask some colleagues, ask some customers, do some market research to determine what should I expect my return on investment to be if I make this purchase. Very important. Now, on the flip side, you can also do ROI for time. What is your return on investment on your time? So, for example, a client generated 4 leads from one YouTube video. Out of those 4 leads, 2 signed up for an hour a month program. The video took the client 1 hour to create. The client's hourly rate is $75 per hour. Therefore, with an hourly rate of $75, the client made a 1 hour video. With an hourly rate of $75, the client made a 1 hour video and generated 16 paid service hours equal to $1,200. This means that the client's ROI exceeds 100%. Okay? So it takes this person 1 hour to create content. All right. In that 1 hour, for that 1 hour of that content, for that video, they were able to generate 4 leads, but 2 program signups, which equaled to be, what did I say? $1,200. So if this client's hourly rate is $75 and it took $75 an hour and it took them 1 hour to create this video, okay, and they actually generated $1,200 from that video, then that person's ROI is going to greatly exceed 100%. Now, that's given there are no additional expenses incurred to make that video, which there most likely will be. But you have to be able to tie your expenses directly to that video, or else it does not a proper calculation. Okay? So with that being said, you can definitely track the amount of time it's taking you on social media and how much money you are actually gaining from your social media input. Okay, so determine how many hours am I spending on social media, and then you can determine what is my hourly rate, and then you can determine what are the amount of services that I'm generating an income on. What is my revenue that I'm generating in income? What is my total revenue that I'm generating based on the numbers that I'm putting into social media? Okay. So for instance, if you're putting in 10 hours of social media, which that seems like a lot per week, but your revenue is, say, $2,000 a week based on the content that you post on social media, you then can determine, is posting on social media or being on social media a productive use of my time? Is it worth my investment? Okay, so ROI can definitely work on time as well. Here's a case study for outsourcing. A client outsourced their sales funnel to a pro. They paid $4,500 for the funnel. And in the first 90 days, they generated $6,200 from the sales funnel. So we take $4,500, subtract that from $6,200, and divide that by 4,500. That gets you an ROI of 38%. Now, I don't know if that's a great, is that a great ROI for a sales funnel? Well, you would want to talk to someone who creates sales funnel to ask them, hey, what is your typical ROI for these types of projects? If they're making you a sales funnel, you want to ask them and ask a couple, and then you can determine what the average is. So if you ask 3 different people, this is why it's important to shop around. If you ask 3 different people who create sales funnels, what their basic price is and what their expected ROI is for each project, then you can determine a base price, and you can just say, okay, is this $4,500 reasonable to spend? All right, financial management support. So this is what we do at Create Accounting Services. The financial management team at Create Accounting Services brings your business decades of experience: CPAs, EAs, CFOs, controllers, QuickBooks Pro advisors. Our CFOs are skilled at interpreting the high-level accounting language and provide you with the best information to make sound decisions in your business. With over 10 years of auditing experience, the staff at Create Accounting Services use strategic systems, documentation, and procedures to provide a valuable level of audit protection. So we help you determine your ROI by tracking and evaluating and documenting the activity in your sales activity, your expense activity of your business. Okay. And that also helps us to provide an additional level of audit protection, as well as help you determine your return on your investments. So having a financial management system in place is crucial and extremely important in helping you determine your ROI. So what we do is we detect and plug financial systems and gaps. So we detect and plug any gaps in your financial systems. We'll identify your ROI for projects, launches, and offers. So if you have a new project coming up, or you have a launch coming up, or you have an idea for an offer, we can determine your ROI for you based on your previous history. We can analyze past data to predict future events for you. Also, implement financial systems to streamline your workflow, which is really important because you want your workflow to be simple. You want to be able to work on your business, not in your business. We also educate our clients through QuickBooks training. We educate our clients on financial systems by providing QuickBooks training, and also by teaching you best financial systems practices based on accounting standards. So next step, here's some homework for you. I want you to organize your income and expenses for the previous month, and I want you to run your P&L. So I want you to determine how much you made for this past month, for the past 30 days, how much revenue you had coming in, and then I want you to deduct the expenses generated to incur that income, and I want you to determine your profit or your loss. I want you to then take your biggest expense, determine its value, the cost associated with the transaction, and the dollar amount of revenue you generated from that specific transaction. So I want you to determine what was your biggest investment this past month. Okay. What were the costs associated with that investment? Okay, so what was your biggest investment? What were the costs associated with that investment? And what was the dollar amount of revenue you generated from that specific investment? And I want you to calculate your ROI. Now, if your ROI is less than 0, I want you to consider alternatives to that expense. All right. And then drop me some comments or send me an email and let me know what your alternative was. Submit your homework in any way is easiest for you. So you can submit this in the comments. You can submit this to email. But I want you to, at the very least, write it down. Okay, because many times we go into this frenzy, and I've done this before, start thinking of all of these different launches that you could do and all of these different offers you could make. And you start thinking of all of these different new products you could sell or make or services without sitting down to look at what was your last investment and what was the ROI. What has been your most lucrative investment? And what was the ROI? And then do those actions and continue to make those investments that are generating you the best ROI. Okay? Here's how we can stay connected on Insta, Facebook, and www.createaccounting.com/connect. All right, guys, see you in the next video.